Welcome to Stream, a trucktractortrailer.com production. My name is Zach Miller. I'm your host, and I'm honored to be joined again by Andrew Johnston, who is one of the co-founders of TrueCore Capital. Andrew, welcome. Thanks for joining us today.
Yeah, pleasure to be back.
So, this is really interesting because you and I are pretty young people. I am a little bit older. I have to say, I have to out myself there. But the point is, you and I are both under 40 years old. So why do I bring that up? Because we are seeing the highest inflation that we have in 40 years. So in our lifetime, Andrew, this is the highest level of inflation. So let's talk through that. Let's talk what that level of inflation means for trucking, for truck prices, really for the industry at large.
Yeah, I mean, it's super multifaceted. In general, you go to the grocery store, things are going up. You go to the gas station, things are going up. But when you talk about trucking, pretty much everything related to trucking is going up. So, I mean, let's start with the obvious one, truck prices.
Yep.
I think anybody listening to this podcast that is interested or has bought a truck in recent history has seen that things have gone up. 2016 is going for 50, 60, 70K or now going for 90K.
Oh, yeah.
I think recently I saw 2020 or come through my desk, a 2020 that was coming through at 220K. I mean, that in and of itself is astounding. I think in most places in the United States, that's a small house, right? Or even a large house.
Yeah.
But now you associate that with gasoline, you associate that with other financial products. It gets the dollars and cents are racking up for most of the industry.
So now we have the inflation part of it, right? And then the second part of that is, well, the Fed is going to raise the interest rates. And so some of us in the industry might be dealing with sort of a two-pronged crunch there with high inflation and then increased interest rates. So let's talk though about some of those prices you mentioned, right? Some of those really high prices, but people still need to buy assets. People need freight needs to move. Old trucks are breaking down; they have to be replaced. What do you advise for people who they need to buy, but they have their concerns about maybe the interest rates, maybe the price in general? What do they need to know?
Okay, yeah, I mean, in general, you just need to be careful about who you're working with and the type of contracts that you're entering at this point. Is becoming more and more pertinent to start paying a little bit more attention. I know there's a lot of banks out there, local credit unions that do adjustable rates on their equipment loans and equipment leases. For example, we did a loan probably a year or so ago that was the interest rate was prime plus something, prime plus a quarter. But prime is set by the Fed. So that person, they agree to have an adjustable interest rate. Now, by and large, when you buy a truck, trailer, all that type of stuff, it is a fixed interest rate. And now, even though rates are going up and prices are going up, in the end, you could be actually getting a much better deal if you lock in your rate right now.